Hey, welcome everybody. We had a little breakout today in NIO. This is a stock we came up on our radar screens about a week and a half ago, and we've been stalking, waiting for it to break out. Here you can see a little screen capture of the room this morning. That was what we were after, generally speaking, the first half hour, 45 minutes of the day. We go into the first hour, breakout mode, and that's what we had. While we were looking at this move in the form of a breakout of the first last conditional change, that's right here. Just we'll zoom this up. This is, again, think or swim. So we've been on this trade for a couple reasons. Number one, it maintained its structural pivot support right here. That's the monthly pivot right there, using person's pivots. This is the weekly pivot. That's the daily pivot. And what we said is, look at this stair-stepping. Daily pivot higher, daily pivot higher. Daily pivot's above weekly pivot above monthly. So basically, think of the pivot point as a moving average. The short term is above a medium term, the medium term above the major longer term. So you have the monthly, the weekly, and the daily. So finally we had a move that we were anticipating for the breakout, because NIO, if we change this over to a daily chart, trend, consolidation, breakout, consolidation, and we've been stalking this trade for about a week, and here's the, or maybe it's been a little bit longer. Here's our weekly analysis. The weekly chart's been in a weekly buy since, well, gee whiz, way over here. That's the PPS buy signal. Every single month, as you see, monthly pivots are higher. But what it does is it generally tends to run up and then consolidates, runs up, and then after a period of 4 or 5 weeks, has the breakout. So we were timing the breakout to happen today, and we noticed that there was just an exorbitant amount of volume action in the upside calls today. So we don't look for unusual volume activity. What I look for is unusual price patterns on my PPS indicators and our scans, and then we start looking for an option strategy. If it just so happens to coincide, because I firmly do not believe 100% in unusual volume activity as the leading precursor to upside moves or downside moves, because traders hedge. For every buyer, there is a seller. So I like to have a little bit more research behind, and then it helps our timing. So with that said, the relative strength on this chart, you can see we've already done our homework. This is the relative strength PMC indicator found on Thinkorswim. And this is the on-balance volume trend tool. As you can see, as the market was going sideways, the on-balance volume was making consecutive series of higher lows. That was another thing that caught our attention, and why today in the trading room we were suggesting to get long, because it was breaking out, and a first 60-minute close greater than last conditional change, that red line in the sand right there, as well as the pivots. That was the impetus for taking the breakout. First, it took out the swing high, the last conditional change. That was in the first few minutes of the trading session. Let's get on that. There you go. So right about the time, if you think about it, what is that? Approximately the 10:45 bar, at 10:15 bar, excuse me. This bar ended at 10:15. It begins at 10, ends at 10:15. When were we talking about it? At exactly 10:14. So on this breakout bar, that's when we were talking about buying into NIO. Really great setup trade. Well, again, it's not like looking at Amazon, but with a 100-point move a day. However, this was a really nice upside trade, and how we stalked it. All right, let's move on to some other things that we were looking at. Our Algo Optimizer, and let me switch screens here for you. All right, so we run 2 trading rooms. One is the one that we talk about for trades, stocks, etc., and options. And the other is our automatic auto trade program, and it's called the based off Algo 17 creation. We did a little video on that yesterday. Go back on the YouTube channel and you can check it out. I do want to point out that the SPXL long position from last week got out on an exit compression stop. That was one of the functions that we have 3 different stops that we can program: an LCC, dynamic, and compression. And we teach people what those 3 various differences are. However, the SPY model, and that's what I want to bring into your focus here, it is still long, and it says it right here. It's long from 325.87, 325.87, and it had been long since Friday. So what's the difference? Well, the SPXL is a leveraged ETF, and it's a little bit more violent. It had a closer stop, so a beautiful trade nonetheless. what's my prognostication going forward? The advanced decline in the market today, slightly negative, 194. You can clearly see how we construct our market analysis. We have a 5-minute SPY down here. Here's your advancers, 193. Here's your decliners, 305. So today we're slightly biased to the downside. 500 stocks in the S&P, below 250 means more than half the stocks are down on the day. So there you have it. I don't think that's a bad deal, considering, in fact, yesterday we had such a strong move. Now, what I'm looking for in the market is, with the VXX, it's one of the other trades that's helping to confirm still long side buy dip trades, because the VXX is in a free-for-all. Our model here, the VXX, is short as well, has been short. You can see its performance right here on the screen. Now, I think tonight's debate, this market is setting up, and you can see in our live trade room, the CME, effective October 12th, they're expanding overnight limits on circuit breakers, 5% up to 7%. Why would they do that? I mean, most people think that the market could melt down and there'd be a circuit breaker to catch the market from falling. But in the futures, melt-ups are just as equally disastrous for hedgers as meltdowns. And again, they're in the cash market, there are no circuit breakers upside. It can go up forever. They just want to catch the market from stopping and panic selling. And that's why we have circuit breakers on the downside of the market in the cash market. So I'm wondering, maybe they know something we don't. Are there a lot of shorts in the market? Could commercials get caught on the short side? And we could see a melt up? I don't know. But tonight's debate with the presidential contenders should be quite interesting. And whichever way it is, to me, technically speaking, the way the market looks in the breadth, the way the market is starting to position itself in the stocks that are moving, it's kind of showing that we could see, believe it or not, a melt up in the S&P 500 and the Dow Jones Industrial Average. So anyway, that's kind of what it looks like as we're talking right now. More importantly, there's another model that we like to look at, which we did a summer school, and we also did one back in January. Remember what I talked to you guys, if you watched the video yesterday, and I said, hey, the Razor Focus, this was a class we did back in January. And everyone got this exact workspace, and you can clearly see it says Razor Focus. Ironically, the Razor Focus model, and that's the point of today's presentation, not just to share with what we're doing in the trading room, but also to share what the indicators are doing. First off, the Razor Focus model, and may I just point out, the SPY model, it's actually long as well. Now, what do these lines represent? This is a trading system and a trading strategy. The red line indicates the initial stop, and you see where the entry was on the arrow. The orange line right here, that's their emergency stop. These little hashtags right here, these little gray hashtags that you see, that's the trailing stop function. This is a dynamic trailing stop function. It uses last conditional change and a combination of ATR. And we use that math formula. It's a lot better than using other forms that people might use for trailing stop functions. We also have the long, this is a long only 60 minute, this is short only 60 minute, this is long and short. Why do we do that? Because people can turn short on when you're bearish. So if you're in a PPS sell mode, take shorts. When you're starting to go into a daily buy signal, which by the way, that's the whole point I want to make. The long only just got long again. It was long way over here at the beginning of July. It got out on a compression stop, left a little money on the table. The market just puked, and it got back in a little bit better than where it got out. So I like that. Stochastics looking healthy. The volume tool, that's a JP proprietary volume tool, is looking better. And we've got our short-term models, both long, short, long. I think that the market is capable of seeing newer highs. So in the S&P 500, depending on, this is the end of the quarter, anything can happen, especially as we get into October. Everyone is assuming, the assumption is that the stock market, the weakest time of the year is, October. But that's under normal years, and this is not a normal year. So with that said, I would say that the market has a capacity to rally. Today we were talking about buying dips in the market. Our algo optimizers are kind of long, meaning right here. It took a profit on SPXL, and the VIX is falling, going back in line with the overall market. So going forward, I think this market is setting itself up for another rally, and let's tell you where the market could go. All right? The S&P 500, in fact, yesterday's performance, the Dow, the Qs, the Spiders, the Russell, the NASDAQ Composite, they're all in daily buy mode. This is a high closed doji. This is a very strong buy signal. Today we had a strong upside move in the breadth of the Dow. It pulled back, and if it rallies and starts to creep higher, man, that's extremely positive for the Dow Jones Industrial Average. And the same can be said over here with the S&P 500. Money can kind of come off the table in technology and rotate into either both some value names like what's in the Dow and the S&Ps, financials, energies, industrials, materials, and there's also maybe some growth, which would be considered in the Russell small cap. 'Tis the season for small cap to start to outperform. After all, we can't live on Apple and Amazon and Tesla all by themselves. There are other companies that do well. In fact, John Deere is like unbelievable off the charts. But steel companies need to go up. And last I checked, a tractor is made out of steel. They don't use plastic tractors, right? And if John Deere is doing so well, then maybe perhaps the steel business and Nucor and other companies, and we look at maybe chemical manufacturers, the process to make stainless steel and chrome, all of those types of industries should start to see maybe a boost, and they haven't. Thanks for listening. Keep that under consideration. We will update you as, of course, market conditions dictate and how the systems migrate. In other words, how they perform. Thanks for watching.